Assalamualaikum and a very good morning. I bid to everyone, especially to our lecturer, Ms. Zahra. This morning, our group will present on topic of Fundamental of Accounting System, Chapter 9. Under this topic, there are four subtopics, which are food accounting, accounting for receipts and payments, accounting for petty cash, and government financial accounting system. So, a sound public financial management is important to a country's development process because it supports the public sector in terms of managing and controlling the financial resources and also producing quality delivery of services. The financial management system is essential to achieve appropriate, efficient, and effective spending level of accountability because it might help to reduce or avoid issues that will affect the country's development, such as wastage, embezzlement, and corrupt practices. Okay, what are the objectives of financial statements? There are 5 objectives, which are produces, serve, prepare, creates. PSSPC. The first objective is to produce relevant financial information about past and present transaction of the government. The second is S, serves as basis for decision making for future operation. Third, serves as the control mechanism for the receipts, disposition, and utilization of government funds and properties. Fourth, prepare financial reports pertaining to the results of the operations of various government agencies that are for dissemination to the public. And the last objective is to create the public accountability. Moving on to the next part, features of government accounting system. There are 5 characteristics of government accounting system. Guess. The first characteristic is to comply with the constitution, statutory, and other legal requirements. Accounting system is maintained according to the government rules and regulations. So it must be complying with the federal constitution, statutory, and other legal requirements. For example, the Treasury Instruction, TI, Treasury Circular, TC, and also Treasury Circular Letter, TCL. Second characteristic is it relates to the budget classification. All expenses are classified into budget classification. Related to our previous chapter, the accounting system facilitates budgetary control, legal control. So, budgeting and accounting carry complementary function into the government's financial management, and they are closely integrated. For example, supply expenditure and emolument. The third features or characteristic is clearly identifies the objects and purposes for which funds have been received and expended. All accounts must be maintained in a manner that will clearly identifies the objects and the purpose. For example, tax revenue. Tax revenue will be recorded under the object code of 60,000 for the purpose of all tax revenue collected from personal tax and corporate tax. So, the objects are tax revenue by the subject code of 60,000 under the purpose of all tax revenue collected from personal tax and corporate tax. The fourth characteristic is facilitate audit by external review authorities and readily furnish the information needed for effective audit. Accounting system must be designed for this feature to make sure that it consistent with the audit and accountability processes. As we all know that auditing provide reasonable assurance and ensure that financial transactions are recorded properly according to the relevant procedures. This is evidenced through proper documentation and classification. The last characteristic of government accounting system (GAS) is permit effective administrative control of funds and operations, program management, and internal audit and appraisal. Accounting system must be developed on this manner. For example, through word accounting. So what is word accounting? Word accounting is a relevant mechanism developed to ensure effective recording of public sector activity. Specifically, a vote book records allocation of funds received, actual amount of spending, committed liability, as well as funds balances. Okay, next part is accounting operation. Public sector is a non-profit organization. So, as a non-profit organization, public sector accounting system is not expected to inform its profit and loss, rather to discuss how public monies and public stores have been used for that purpose. So basically, accounting operation it focus on operations of public money and public stores, which have to be recorded and accounted properly in accordance with legal and statutory requirements. Next, accounting operations is done by referring to TI, Treasury Instruction, and also TC. The TI and TC provides guidelines on the recording and accounting of public monies and public stores. Public sector accounting is based on the principles and assumptions of double entry system of bookkeeping. So, government accounting is required by law to keep the principal books accounts such as cash book, journal, ledger, as well as subsidiary records. So it is compulsory for them to keep them. Every financial record also needs to show the double effects as stated by the Treasury Instruction TI 143. All books of accounts must be balanced monthly, and the balance in the subsidiary ledger agreed with the respective control account. So, method of keeping the accounts must be classified according to approved estimates of revenue and expenditure of the year. The revenue should be recorded according to appropriate document. Meanwhile, the expenditure will be watched and coded according to the government expenditure. So you guys can refer to the textbook page 186 under box 9.1 for better understanding. Moving on, the next part is chart of account. So what is chart of accounts? Chart of accounts is a coded listing of the accounts contained in the general ledger pertaining to an organization. It represents the financial data structure of the organization. Chart of accounts function as the primary reference for the recording and also accounting of expenditure and receipts of public money and public store. This chart of accounts enable transaction data to be classified and coded. So, it provides detailed data elements from which information can be assembled and presented in financial statements. So overall, the objective of coding system is to improve the transaction process. This is important part to remember. There are 3 rules must be observed in the creation of the chart of accounts. The first is Treasury Circular TC5 2004. It stated that there must be a code of 5-digit numbers of various objects of expenditure and receipts. So, for expenditure code, it is numbered from 10,000 to 50,000, and meanwhile the receipt code is numbered from 60,000 to 90,000. It must contain 5-digit numbers. The second is these codes is divided into 4 levels, which are standard object, SO, detail object, DO, extension group object, EGO, and extension object, EO. These codes will be used by all government agencies to record the expenditures and receipts of public monies and public stores. Standard object is the main groups of the expenditures and receipts. It categorized into 5 groups of expenditure and 4 groups of revenue. Each of main category in SO, the standard object comprises a list of DO, detail object. Listed under the DO is EGO, extension group object. It represents the itemized group of each expenditure and revenue. At the final level, EO, extension object, it represents all the subhead of expenditure and revenue in details under the EGO. Please refer to page 188 of textbook. It provides an illustration for better understanding. Okay, why we classified them? What is the purpose of this classification? There are 4 purposes: SEFF, simplify, enable, fulfill. The first purpose is to simplify the process of recording and preparation of periodical reporting. Next, to enable detailed information to be gathered for the purpose of revenue and expenditure analysis. The third purpose is fulfill. To fulfill what? To fulfill the needs of accounting system implemented by the Accounting General Office, AGO. And the last purpose is fulfill. To fulfill the needs of Department of Statistics in the preparation of the complete national accounts. So there are 4 purposes, I repeat. SEFF, to simplify, enable, fulfill, and fulfill. So I will pass the next presentation to my group members. So thank you.
And on accounting for receipts. As you know, receipt is any income received or earned by the government. It is based on cash basis, and the detailed procedure is laid down under TI from 60 until 91. TC stands for Treasury Circular Letters. It is circulated from time to time, which aim to provide information on amendment, approved estimates, and detailed guidelines to certain procedures. However, not all the government organization itself requires them to collect revenue. Hence, only those that make collection are required to follow respective procedures stated in the TI. Next is responsibility of controlling officer. There are 3 main responsibilities of controlling officer that stated under TI 53. The first one is to make a proper collection to all the public money received or either receivable. Next, to save custody of the money collected. Last but not least, to record in the accounts rendered. As you can refer to the page 190 in the textbook, you can take a look of each procedures on flowchart of accounting for cash receipt, which is fall under manual environment. So, let's move on to accounting for cash receipts. It is called revenue received from the public. It can be formed in terms of cash, stamps, checks, legal tender, and foreign currency. As I mentioned, if you have referred to page 190 in the textbook, there is an illustration on flowchart process for accounting for cash receipt. There are also procedures to deal with cash receipt consists of issuance of receipt, custody of unused receipts, recording of collection, lodgement of collections. So, For the first one is issuance of receipts. Under TI 60, it stated that official receipt must be issued to the payer in order to inform the payer that money has been received. Further than that, the collector is responsible to notify the payer about their rights to demand for receipt as stated under TI 61. Meanwhile, TI 70 has stated that segregation of duties has been emphasized in process of preparing a receipt, which means that official receipt can be printed out directly from the system and approved by Accountant General. But if receipt is spoiled, it must not be destroyed. Instead, it must be cancelled and attached together with carbon copies for audit purposes. When recipient is acknowledged, the carbon copies must be prepared by a responsible officer. It should be consist of details such as collection of debt and amount received. Next is custody in unused receipts. The safeguarding of unused receipt books and license books is very crucial in an organization. Under TI 65, collectors of public monies are responsible for safekeeping and proper use of all receipts. To be exact, the collectors must ensure all the receipt book, license book are securely locked up, either it is under his own control or by senior officer who is not involved in making collection and issuing the receipts. It should be issued in numerical sequence. However, any defective books should be returned to the government printers. Furthermore, it is recording of collections. Following TI 72, all receipts must be recorded individually into cash book at time the transaction occurs or before the end of the day. While cashier records all the transaction, then another officer other than cashier must transfer the recording into cash book. If there is no second officer is available, the specific officer has been obtained or the specific sanction must be obtained from Accountant General. Moreover than that, if amount collected is different from amount due, the officer in charge must inform the collector in writing. Then, any surplus on balancing books with actual cash received must be credited to the government revenue under miscellaneous receipt. And this must be reported to the head of department. But currently, as you can see, majority of public sector organizations are using computerized accounting system to record all the transactions, the bookkeeping, and the recording. So, the last one is lodgement of collections. All the money received that reach that approved amount must be lodged into the bank accordance with specific revenue code. Under TI 78A, it indicates that maximum approved amount is when the cash is excess of Rm 500 or either total collection including checks, postal and money is exceeding Rm 2000. If there is smaller amount collected on the last working day of the month, it must also be lodged into the bank. Following to TI 79A, bank slip must be prepared when collections are lodged into the bank and must be forwarded to respective treasury at the end of each month. Meanwhile, the total lodgement for the day will only be recorded in the cash book on the day of lodgement. Every amount of bank slip forwarded must be accompanied by collector's statement and acknowledged by official receipt. However, if no collection made in any specific accounting period, then nil statement shall be submitted. In essence, no public money can be used either in advance or as loan between time of receipt and time lodgement into bank. We have covered accounting receipts and cash receipt in the previous slide. So here we go to accounting for other form of receipts. It was discussed about the procedures to account other than cash receipt, which is revenues by way of stamps, mail, checks, and legal tender. Under TI 64, we have revenue collected in stamps that should be affixed by person paying. Such revenues must be cancelled by authorized officer. Regarding to TI 71, when officer receives a mail of revenue, it must be recorded details such as debt receivable. Then it will be handed to the cashier, who will initially record and register the receipt. The receipt will be issued and will be recorded as well. Under TI 76, all checks must be closed, not negotiable, and made payable to appropriate department or accounting general or state accounting or state treasury. Every check must show check number on it. Regarding to 77, any revenue received in form of legal tender in foreign currency should be sent to local treasury or sub-treasury. And as you can see in this slide, there are emphasized on other issues such as TI 80, TI 81, TI 87 and 88, and TI 89 and TI 90.
Accounting for payment. Treasury Instructions number 92 to 110 govern the payment system of government agencies, which includes how and when to record a payment as well as the monitoring and controlling of the allocated funds. Any outflow of money is considered as an expenditure or payment to the government. An expenditure or payment from a public sector perspective includes the payment for acquiring fixed asset, payment for supplies and services, and payment of emolument. Objective of Treasury Instruction number 92 to 110 are to improve the quality of cash management, to improve central and branches government agencies, and to improve government agencies' payment system. Standard codes are used to ensure government's payment system is controlled and approved before any payment could be made. Treasury Instruction number 50 54, it highlights that a controlling officer is expected to control the expenditure provided for the head of estimates under his control. According to Treasury Circular number 5, 2004, there are 5 types of payment, namely emoluments, services and supplies, assets, gifts and fixed charge, and other expenditures. Payment for purchases for services and supplies. The procedures for payments begin when the authorized officer from the purchasing departments prepare a local order to the supplier. On receipt of goods, the documents of delivery order and invoice will then be submitted to the finance department for payment. Treasury Instruction 93 states the condition that the respective accounting officers need to give focus upon which receipt of a report is received from the purchasing department, which include the payment will not cause any excess on the amount provided for the subhead to which it is chargeable. The authorized officer certifies that the payment charged are in order. Any repayment of advances or other liabilities have been duly deducted from the amount of payment. Treasury Instruction number 99 states that all vouchers prepared should contain detailed particulars, including the date of transaction, voucher numbers, and quantities to enable it to be verified adequately. Treasury Instruction number 101 states the controlling officer may delegate his authority for vouchers to be certified. Treasury Instruction number 102 states the signature of the controlling officer or his authorized representative indicates the accuracy of every detail contained on the voucher. The authorized officer will be held responsible for the services specified, which have been duly performed, and that the price charged is according to the specification of contracts. Treasury Instruction number 107 states that a payment will be considered as unvouched expenditure if there is evidence that it has not been properly incurred, authorized, and discharged. Therefore, the respective authorized officer must seek approval of the Treasury for payment to be charged to the account. There is Treasury Instruction number 109. Treasury Instruction number 108. If for any reasons the original payment voucher is lost, the authorized officer must produce the certified carbon copy of the voucher to the officer responsible for the payment. Treasury Instruction number 98A. A check is then prepared after the payment voucher has been vouched and issued to the payee. When a check is drawn or received for distribution, a payment register should be maintained. Treasury Instruction 98B states the payment register should be inspected and initialed at least once a month by the head of department or any authorized representative. Other issues relating to the accounting for payment includes Treasury Instruction number 100, which is payment for traveling expenses. Traveling claims in accordance with the general orders should be presented not later than 10th day of the succeeding month. Vouchers should give full details of dates, times, distances, rates, the officer's designation and basic salary, method of travel, nature of duty, and etc. Other than that is Treasury Instruction number 105, which is payment for salaries, to be paid before the last full working days of the month which they are due. Pension shall not be paid earlier than 4 days from the end of period to which they relate. Treasury Instruction number 97 states the method of payment can be by way of check, cash, petty cash, and others, including electronic funds and telegraphic transfer. Recording of payment transaction. According to Treasury Instruction number 95, vote book is a financial record that must be kept by all government agencies, and it is useful for recording allocation of fund received, expenditure, liabilities, and changes in budget. Treasury Instruction number 95 also specify the primary duties of every controlling officer or officers in controlling the object expenditure. Number 1. To maintain the vote book that shows clearly at any time each subhead or fund allocated under his control. Number 2. To certify a voucher for payment or adjustment. Initial in the column provided in the vote book is required. The officers must also ensure that the related liabilities has been deducted or reduced. Number 3. To reconcile the vote book with the treasury or head officer records not less than once per quarter. The reconciliation statement should be signed and retained. Number 4. To carry forward all outstanding liabilities, including unsettled indents at the end of the financial year. Treasury Instruction number 94 states that the responsibility to maintain the expenditure vote and vote books shall be under the controlling officer. Where a controlling officer or allocation warrant holder finds it necessary to place a portion of an expenditure vote under his control at the disposal of another officer, he may either issue an allocation warrant or sub-allocation warrant to the officer concerned or authorize the officer concerned by letter to incur expenditure against the vote up to a stated limit and to submit vouchers to him for payment. The reasons for maintaining the vote book are to control and ensure that expenditure and liabilities do not exceed the approved allocation, and to produce reports on how allocation was utilized. Vote book is divided into 3 parts. Part 1 is used for recording vote information such as vote number, program activity code, and object code, as well as the total allocation for the year. Part 2 of the vote book records information on increase or decrease in allocation for the year, such as allocation received for expenditure or cancellation of allocation. Part 3 of the vote book is to record detailed transaction, inflow and outflow, such as the allocation received by warrant, reduction or utilization of allocation, environment, to incur liability, to cancel liability, expenses, reconciliation, closing entries, and balancing accounts.
I will be presenting on the procedures for recording the vote book. Resource allocation is divided into 2 types of expenditure, which are operating expenditure and development expenditure. Those expenditures have separate vote, that is, firstly, vote B, supply expenditure, vote T, charge expenditure, and vote P, development expenditure. There are 11 types of transaction to be recorded in the vote book. The first transaction is allocation of warrant received. When a warrant is received for the first time in a particular year, part 1 is to be filled up. Second transaction is additional allocation received. When additional allocation warrant is received, additional allocation in part 1 needs to be filled up. Next is reduced allocation. When a notice to reduce allocation is received, it will be recorded as reduced allocation in Part 2. Fourthly is small or sub-allocation warrant. When an allocation is provided to the allocation holder in another branch, it will be considered as debit transaction. Next is transfer allocation. Transfer allocation or virement can be done between the objects of expenditure within the same programs or activity under the same vote. There are two types of virement that are virement in and virement out. Next transaction is incurred liability. In incurred liability, expenditure of goods or services will be done through traveling warrant. That liability is to be said incurred or charged. Next is cancellation of liability. If any contract is cancelled, earlier transaction recorded as liability charge and outstanding liabilities have to be adjusted. Another transaction is record expenditure. When in record expenditure, any payment voucher will be considered as expenditure, including payment of liability. The amount is depend on the amount paid. Next is credit expenditure. Credit expenditure is a refund or payment that have been received. It will be considered as credit expenditure. There are two situations to be recorded, which are: first, no requirement for payment. Second is requirement for repayment. While for the adjustment entry, in adjustment entry transaction, the error cannot be erased during the recording. Thus, adjustment entry needs to be done considering that the error has been identified and will be justified. Closing entry is when the closing of transaction done in 31st January in subsequent financial year, where any balances will be brought forward to be recorded in the following year. The last transaction in the vote book is liability brought forward. Next, on the reconciliation of the vote book. Reconciliation of vote book is a process to ensure the accuracy and completeness of transaction recorded in the vote book as compared to the detailed report. The detailed report is to be prepared by Accountant General Department that shows a listing of all payments and receipts for a particular agency. Transactions in the vote book are verified to ensure such expenses are as per report. Any discrepancies, the officer charged should prepare the reconciliation report. It will be prepared by controlling officer or any officer who is authorized. There are 4 reasons for reconciliation. First is to detect any unauthorized payment. Secondly is to detect error in posting transaction at Accountant General Department level. Thirdly is to control the expenses and liabilities within the authorized allocation. Lastly is to ensure the report prepared are reliable, accurate, and complete. The procedures for reconciliation are to review the detailed report with the vote book, which is investigate the transaction and report any unauthorized payment. Then reconciliation statement need to be prepared. And lastly is to record the contra transaction to the reconciliation of vote book. Next, I will be explaining about accounting for petty cash. According to TI 111, the Secretary General to the Treasury or the State Financial Officer may authorize the Accountant General or the State Accountant or State Treasurer, as the case may be, established impress system for the petty cash. The Accountant General or the State Accountant may sanction any public officer to utilize the petty cash fund for the disbursement of expenditure incurred. The petty cash is used for specified purposes as approved by head of department, and the recording must be separated from the main cash book. There are 2 advantages of maintaining the maintaining the petty cash book and account for petty cash. First is efficiency in job division, which means the task of, for example, the task of handling and recording would be given to the junior member staff, while complex tasks will be given to experienced staff. Secondly, if petty cash items were entered into the main cash book, items would need to be recorded and posted to the ledger one by one. It will reduce administration costs. Next is procedures for making payment from petty cash. It is the responsibility of the head of department to validate, authorize, and ensure they are properly recorded. According to TI 113, the operation involved procedures for establishing petty cash fund, procedures for making payment from petty cash fund, and procedures for replenishing the petty cash fund. The procedure to claim begins with officer who incurred the expenditure fills the application form and submitted to the personnel in charge. Then the clerk will prepare the formal payment voucher to be sent to the head of department. The head of department will validate and authorize. He have the right to accept or reject. Then, if it is be approved and validated, the petty cashier will record the payment and pay money to the officer. Lastly, if the amount of float money finish before end of the week, account will immediately be reimbursed. That's all from us. Thank you.